So we have just talked about PP&E is just a tangible non-lived asset. We've also gone over some examples of PP&E as well as how PP&E is disclosed on the firm's financial statement. Now let's look at the accounting for PP&E. So as I just mentioned, there are three major accounting questions for PP&E. The first one is whether to capitalize an item or to expense it. So capitalize basically means that once the firm purchases and spending money, for example, purchasing something, it is putting that item on the firm's balance sheet as an asset. That is capitalized. So for example, the firm spent $100 purchasing a desk. If the firm decides to capitalize it, the desk will appear as an asset on the firm's balance sheet instead of the expense as an expense in the current period. So that is capitalization. And the expense basically means that the firm just expense it, put it into the firm's income statement as an expense in the current period. So the asset, the item is not going to stay on the firm's balance sheet. It is going to be expensed right away. So that is expense. So the first major question here, once the firm spend money purchasing something, the question is whether to capitalize it or expense it. That is the first accounting question. And if the firm decide to capitalize an item, then the question is what to include in the capitalized cost. So for example, this firm spent $100 purchasing a desk, then it is $100, the capitalized cost of the desk. In other words, it's $100, the money that should be, the firm should put on its balance sheet as the value of the desk. So that is a very simple example, but it can get more complicated. That's why it is an accounting question here. So specifically to capitalize or expense and what to include in the capitalized cost, we're going to first start from the base case situation. And then we're going to move to the situation of a lump sum purchase. If the firm is purchasing several items in at the same time. And then we're going to, after that, we're going to talk about self-constructive asset. Or in other words, the firm is not spending money purchasing the asset. Instead, the firm is building the asset by itself. And then after that, we're going to talk about non-cash acquisition. How about if the firm is not paying cash when it is buying the asset? It is buying the asset through some other means. And then the last thing we're going to talk about here is expenditure after acquisition. So how about if the firm is spending some additional money after its initial acquisition of that asset? So this is the first major accounting question. The second major accounting question is, if the firm decides to capitalize an item, then how to calculate depreciation? So this question, it will be irrelevant if the firm decides to expense an item. There will be no issue of depreciation because the asset is just expensed right away in the period when it is acquired, and there's no issue of depreciation anymore. However, if the firm decides to capitalize an item, then we have the issue of depreciation. So the third major accounting question is, if the firm decides to capitalize an item, then when and how to recognize the impairment? So this question we're going to talk about in next class. And similar to depreciation, this question is only relevant when the firm decides to capitalize an item. So if the firm decides to expense an item, there will be no issue of impairment because the item is gone like right away in the current period. So it is only when the firm decides to capitalize an item, we have the issue of when and how to recognize the impairment. So now let's first look at the first base case situation here. First of all, let's look at this example. For example, if firm B bought a machine for $2,000, what is your journal entry? Please spend 1 minute, write down your journal entry, and you can pause your video for now. So the journal entry here is to debit PP&E 2,000. So if the firm decide to capitalize this item, then the journal entry is to debit PP&E 2,000, credit cash or account payable or etc. whatever. So for the firm is giving out for 2,000. We're going to talk more about this credit part later. But now let's just assume it's either like cash or account payable, something like that, for 2,000. So that is the journal entry. Yeah, and of course, because this machine is going to bring future economic benefit for the firm. So the firm decides to capitalize this item, and this is the journal entry to record it when the firm decides to capitalize this machine. So the machine brings, yeah, so again, the machine brings future economic benefit to the company. Thus, the company capitalize it on the balance sheet as an asset. And this $2,000, it is called the capitalized cost. And the key issue here is what to include in the capitalized cost of an asset. So what to include in the capitalized cost of an asset? The example which looked at just now, that is the most simple example you can, that is the simplest example you can get. So let's look at another example here. Suppose firm B bought a machine for 2,000. In addition, expend the following costs putting the machine to use. Transportation cost, 500. Installation and testing cost, 300. Sales tax, 600. So please spend 1 minute here, write down your journal entry, and you can pause your video for now. So the journal entry here is to debit PP&E for 3,400 and to credit cash. Suppose it is bought by cash for 3,400. How do we get this 3,400? So that is the 2,000, which is the cost of the machine, plus the transportation cost, 500, plus the installation testing cost, 300, plus sales tax, 600. So basically all of those. So the general rule here, when we decide what to include in the capitalized cost of an asset, the general rule here is it should include all of the cost necessary to obtain the asset and place it in a condition where it is ready to be used by the company. So whatever we spend to bring the machine here, to put it in a usable condition, whatever we spend, it should be included in the capitalized cost of the asset. So that is the general rule here.